Bring that ass back like a boom, 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 boom.
Hey guys, this is Supernova from Boom Traders. I'm doing the weekly overview for the 7th week of the year, February, last week of February. And we have a long weekend here. You know, Monday is President's Day in the United States, so the stock market is closed. However, crypto is open, and looking at the way the leading assets, Bitcoin and Ethereum, are performing. I'm not very bullish for Tuesday, but yeah, there's a lot of things that can happen by Tuesday. So I personally ultimately think that Ukraine and Russia will resolve itself, and there will not be any major military actions, but you never know. So without further ado, let's go ahead and do the weekly review here. Our session overview will be as normal. We're going to look at the risk vest, which basically is looking at a broader picture of the market, the tactical trading environment. I will also look at the current market, going over the indices. I'm going to go over some crypto, gold, oil and bonds. This is important, and then we're going to do some market internals and finish with the summary, plus some leading and bottoming groups. So the first thing that I want to point out, our risk vest model is on a sell signal since November 22nd last year. And if you want to look at the chart and what I mean by this, November 22nd was this day right here. So we issued our sell signal on November the 22nd, and we've been there ever since. Now, of course, we had a spike above it early this year, but then we just broke again. And this is how the Nasdaq futures look since our November 22nd sell signal. So this is the day that we issued the signal. Let me just remove this drawing here. So this is the day that we issued the signal, and it's been just going down ever since. Now back to the presentation. In general, the market is very negative. The up-down volume is negative, so there's more selling than buying. Most stocks, or more stocks, are making new lows, and new highs are few and far in between. You will see one of the groups, which is sea transportation and boat transportation, is actually doing well, and we have 3 or 4 stocks that are actually making new highs. One of them is ZIM. That's one of my favorite tickers to trade for the past maybe like a month and a half, 2. And in terms of stock participation, it's very low. We have very few stocks participation in any breakout, so we have this on negative as well. As you recall, last week we had dip down volume and the stock participation on neutral, but with the last couple of days drop and the uncertainty in the market, this has been changed to negative again. So very, very negative environment for trading. In terms of the tactical trading setups, we're trading mostly breakouts, and they're not working well. They're far and few in between, and if you catch something, you have to be very quick, couple of days at the most, and just sell it. There's no follow through, and swing trading in general just not working right now. So if you really want to trade, you either trade small size or you move to a smaller time frame, like 30 minutes might be okay for you. So your holding period is going to be like day to 2. So that's what you can do, really. When we go to our tactical trading environment, these are the things that we look at. We look at the setups, and whether we have breakouts and confirmations or violations, and most importantly, where do they happen? Do they happen at the pivot points or at the base, which is actually worse? Do we have our stops triggered, and how many of the stocks are extended above their respective moving averages? So that was it. I really went over it very shortly because there's nothing new to tell you right now. As far as the major indexes, let's look at some charts. I already showed you the Nasdaq, so this is how the Nasdaq looks. I just want to remind you, we are at the support right here. Last time we hit support, there was some extreme volume, as you can see right here. There was some extreme volume last time we hit this zone, so right now volume is picking up and we might see some bounce here. I drew this sloping trend line right here because if we have a bounce, this is the first zone I'm expecting to get tested. And if we do actually have some consolidation here, we might be able to play some longs. You heard that right. Some longs to the upside with limited risk, because if we get some consolidation here, basically your risk will be limited to this wick. If we break down this wick, we're going down. Probably we'll test this one as well, but the risk from around here to here is basically 1, 2, 4, 3.5 for this zone. So it's a good risk reward ratio as a trade. So caution is advised here, and as I said, I might be looking for some longs, but it's a tricky spot. As far as S&P 500, same stuff, just a little bit better. We are approaching the support, which we are already at with the Nasdaq. We are approaching support, and I drew those circles here just to tell you that every time we try to go about this support line here and the lower one, we had extreme volume coming in. So volume came in here, volume came in here, right here you have this type volume, right here again extreme volume around here too. So we've seen some extreme volume around support zones, so it's not going to be that easy to break. As I said, many people are talking about the head and shoulders that are forming here, and if this is the left shoulder and we take this whole formation here as the head, this might be the right shoulder. And also, if you notice, this right shoulder had a double top, almost touched it and got rejected immediately, so by gap down. So it's a very tricky situation for ES. Now the RTY, which is the Russell. The Russell, as I mentioned in the video I posted yesterday, staged a breakout to the downside on Thursday. So if you were looking at this, you could have played it with this close below the rising channel trend line. You could have played this to the low with stop loss on this high, or alternatively this candle, and you should be in some profits right now. But again, it's really tricky. Now the other thing that is supporting a bearish case for the IWM is that we are right below those support lines. As you can see, this was support, huge support for more than a year. Now we broke, and this candle right here, as you can see, this candle right here tried to pierce through the support zones but got rejected, and now this is resistance. So we weren't able to record any higher highs than this, and everything else was downward. So it might look like this is breaking down, and unfortunately the next zone that I'm looking at with major support is right around here. So we do have a lot of space to the downside, which is fast zone. Basically, when I'm referring to a fast zone, I'll be talking about zones that don't have consolidation. They have not built any bases that can actually act as support or resistance. So as you can see, this is straight up. So if it goes straight up, it probably will go straight down as well. So last but not least, Dow Jones. Dow Jones of the four is looking pretty much on par with the S&P 500. So these are the two leading ones. IWM is definitely worst, and Nasdaq's second worst. So you see, we have a lot of support zones here. Most of them were supported by big volumes. So I'm looking for a test right here. Maybe some bounce, maybe not. Again, just as with the S&P 500, we are forming some type of head and shoulders here on the Dow Jones. So if this one breaks, we're looking for 100% extension of the neckline, which in this case should be drawn something like this. Now, you know, drawing trend lines and necklines and stuff like this, it's more like an art than a sure thing. But anyway, if we take this extension right here and we measure it for the Dow Jones, we come up to about 8.75%. So we're looking at about 17% as an extension. Let's see where we land, and probably around here, 18-17%, probably something around here. But first we need to take out this zone right here, which is also support. However, volume was not very high, so this might be taken easily. So this is how the major indices are looking. Not good at all. Just to put it this way, it's not looking good at all. Now, recently, many people have been focused on the bonds, and there's an easy ticker to check that how the bonds are looking. Most people are thinking that when the bonds are going up, the market's going down. Well, this has not always been the case, and although we are at support zone for the bonds, right here is support. As you can see, this level has been supported. There's very little volume, so we saw some volume picking up here on the TLT, and this might prove to be some push to the upside. But as you have seen recently, those pushes have not led to major increases and major declines in the stock market as well. Now, I can go over those, but these are the 30-year bonds. They're sloping downwards, and the only thing that we're seeing is basically some sporadic moves to the upside. We still have like a trend line to break here in order for this to be considered any type of a move to the upside. This is the 30-year-old. This is it's like 10-year-old. Same situation everywhere. Like the bonds are going down. We have some bottom here, bottom in action, and we might be looking for a move up. This one looks a little bit better. If we draw the trend line, this looks a little bit better, but it's still nowhere near breaking that sloping down trend line. And the two-year notes are also the same thing. It's like a major drop with the expansion of the market. Now we're finding some bottom, but then again, look at this. Look at this December situation right here. We hit it, we broke down. Then late January, we had this, we broke down. And this basically goes on pretty much like every month. We have this sideways actions. The one thing that I'm noticing here is increased volatility in the moves. Like if you look at the entirety of 2020 after this big run up, which coincides with the market dropping. After this big run up, we've been like just doing sideways, and we started dropping last year, August, September, and then October, November. It was just really downward sloping. So this was in terms about the bonds and the market. Now let's look at the gold, the oil, and some crypto. And in terms of crypto, I'm very limited because Thinkorswim does not have a lot of charts on it. They'll just look at Bitcoin and Ethereum futures and tell you guys what I'm seeing. I also have some other indications that we might be looking at an exhaustion for Bitcoin and Ethereum in terms of the downside. So I'll update you on that as I see it develop. So we have oil. Oh, this is the crude oil futures. As I said in my other video yesterday, I'm looking for some topping action in XLE, which is the energy spider sector ticker. And oil is confirming that. You can see we're getting some sort of reversal, and if we draw this line, I don't know if this will work, but if we draw this line, this is like a topping line resistance. As you can see, we just hit it, those 2 points. Let me just extend this to the left as well to see. So it's just, you see, we've hit it once, we've hit it twice, we hit it 3 times, we hit it 4 times. So this is the 4th time this has been hit. And if you're paying attention to those extremely simple trend lines, this is looking very toppy to me. So we might see some breakdown of energy. So this is why it's very hard for me to initiate longs on energy right now. I know I've been trying to scan the market for the last 1 hour, and I'm seeing some potential longs on energy stocks because these are the leading groups. But for me, with this setup in crude oil, and let's just look at energy, it's very hard. Now, granted, energy looks a bit better than oil in terms that this support line right here, it's not confirming an extension. We're basically above it. So there's really no, there's no indication that this is hitting any resistance, but the way it looks to me is very toppy. Like, we've had almost identical moves in terms of size. So if you use some Fibonacci extensions right here, you will see what I mean. So from this low to this low is almost 100%, just a little bit above 100% to this zone right here. And if you are taking again the same zone that I've just used to measure the latest run up, you'll see we're at 161.8. So we are in a zone that might actually move down. We might see some retracement here. Let's just measure those and see how those are working. Again, 168. So there is some convergence of signals right here, but there's nothing on top of it, meaning that there's no trend line or no resistance that I can see here that we are hitting. Even this, which is far back, it's like 2019. But anyway, what is important to remember here is that higher energy cost is not good for most other industries. So we might get some sort of help from the Feds and some other industries trying to bring the cost of energy down. As far as gold, let's just look at GLD. Gold has been setting up for a multi-week year breakout of this base, and I'll just move out a little bit to the weekly chart. And as you can see, this is like a perfect triangle. It's been hit. So it's starting from here, 2, 3, 4 times. We finally broke. Now we have some resistance above here at 181, 2, and this is a multi-week year base. So we're expecting some move to the upside. However, be careful if you're trading this. This is slow moving commodity. So your time horizon shouldn't be like 1, 2, 3 days. You're looking here at months of holding. All right, guys. After we covered gold, now let's just take a look at Bitcoin, and I'm gonna be using Binance charts for that because Thinkorswim just plots the futures, which is not truly representative of what's going on right now. Just like with the S&P and Nasdaq, we can see some head and shoulders formation. Like, this is the left shoulder right here, this being the head, this being the right shoulder. We got a rejection, and the 100% retracement from the neckline is again a bottom to about $29,000 to $30,000. However, I am also getting some indication that this move down might be an exhaustion move, and we might be looking at like a support trend line to the upside. So I will update you guys if I see some of my indicators showing we are having a reversal here, so you can actually do something about it and trade it. The situation with Ethereum is pretty much the same. It's basically pretty much the same. We are seeing some drops, and again higher lows here for the support zones. See where this one can take us. We are currently exploring the support zone right here, breaking below it, see if there is any reaction to it. Now mind you, this one happened on some elevated volume right here, so we might be actually seeing some volume coming in and trying to defend those levels. Also, as we mentioned in the chat room, President Biden is rumored to have an executive order trying to regulate some parts of crypto for this week. So we'll see how this one goes. But overall, I think this is a very positive development for crypto assets in general. We shall be looking at some market internals and the VIX, top and bottom industry groups, and then do a quick summary, and then I'll cut this video. We're already 20 minutes, so I'll be very fast with the market internals. I hope that I'm not boring you with all this information and you're not getting overloaded. Now, this is what I look at when I'm looking at advanced decline lines. Basically, this is measuring the stocks that are advancing against the stocks that are declining, and I'll just zoom it up a little bit. This is the S&P 500, and as you can see, the line of the stocks that are advancing against the stock that is declining has been going down ever since November 8th of November last year. So we've been going down on this line, and we've had a higher high in terms of price, but a lower high in terms of advanced decline line, which is showing us that the market is rallying, but on less stocks, fewer stocks are rallying than stocks that are declining. So basically, this is like a fake move up, not supported by a lot of stocks. Looking at the Nasdaq, QQQ, same story. It's been going ever since the beginning of last year. So we're looking at February last year. We recorded the highest point of advanced decline line, coinciding with this high here in price, and then price kept rallying where this advanced decline line kept falling, and now we're looking at a low that is below the lowest point right here in 2018, and then the price of the Nasdaq was 144. So we have a lot of room to fall if we're looking at those advanced decline lines. Dow Jones is was having some momentum here with the advanced decline line moving up, but now it fell back again, and price still haven't reached these lows here where advanced decline line is below. So we might be looking for some additional down movement. IWM, basically advanced decline line, is pretty much following what the IWM is doing. So it's not looking good for any of the indices, speaking about advanced and decline stocks in them. As far as moving averages, basically what you're looking here is again the S&P 500. These are stocks above the 10-day moving average, stocks above the 20-day, above the 50-day, and above the 200-day. And we only have 22% of the stocks in the S&P 500 above their 10-day moving average. 41% are above their 200-day moving average. So we're still sort of 50-50. But if we look at the Nasdaq, we only have 23% of the stocks above their 200-day moving average. So these are the stocks that are still keeping Nasdaq alive. As far as IWM, the Russell goes, we have 33% of stocks above the 200-day moving average, and Dow Jones, same stuff as Nasdaq, 28% above their 200-day moving average. But remember, Dow Jones is only about 30 stocks, so it's not really representative. Put-call ratio, I want to talk about this one just for a second. Put-call ratio, this is a general indication of how bullish or how bearish the market is in terms of the options that are traded. I want you to notice something here. If we look at the years prior to 2020 drop, which was right around here, you have the drop right here, the COVID crash. Put-call ratio was moving between 0.8, which is this green line here in the middle, was moving between 0.8 and 1. Ever since the market crashed in 2020, put-call ratio moved below this 0.8 line, and it's been moving between 0.6, 0.8, 0.6, as you can see, 0.8, 0.6, 0.8. So Now we're seeing the first time in maybe like 2 years that the put call ratio moved above the 0.8 line. So the normal zone for a put call ratio is between 0.8 and 1, and we are now in it. So market is returning to normal in terms of put call ratio. We're still puts are less than calls, so we're not overly bearish. But again, as I'm saying, this is the first time in maybe like 2 years now that the put call ratio is returning to normal values. As you can see, prior to the COVID crash, this was the normal range it was going in. Last but not least, in terms of the VIX, I want to mention VIX just for a short second. This is the S&P 500, this is the VIX, and this is a Bollinger Band indicator on top of either of both the SPY and the VIX. What you can see is when the S&P 500 breaks down the Bollinger Bands to the downside and VIX to the upside, we are followed usually by a retracement back at least to the mean. This is what happened the last time. This is what happened here. This is what happened here. You see the drop, reversion to the mean, up, reversion to the mean. We saw that, and now the VIX is lower. So VIX is not supporting moves much lower than we are right now. And also S&P 500, as we looked at the chart and the ES futures, it's right at support. So this VIX right here not being really elevated, it's not supporting a straight down move. This is what the VIX is saying. I'm not saying this is what's going to happen. I'm just saying that this is what VIX is telling me looking at this. I think that we are good to wrap up the session with this. Let me just look at some other things that we need to cover. These are the top industry groups, and these are the top 10. I don't really think it's a surprise. Oil and gas drilling, exploration and production, international, US field services, integrated, some agriculture and transportation, ship. And as I said, looking at the companies in groups that are making new highs, as you can see here in the last section, we have energy coal, we have some oil and gas exploration in the United States, and we have some transportation and shipping. Let me flip to the charts, and I'll show you one of the top companies that is doing coal is Arch. As you can see, major move. As far as shipping, as I said, ZIM, as you can see, it moved up. You see I've had all those lines. I've been trading this rapidly. So ZIM, we have Danaos, which is DAC, moved up. We have SBLK, moved up. So there's been a couple of those shippers that are making new highs and moving up. But still the domination of the oil and gas is undisputed. The worst industry groups, no new highs. The change for the year to date is negative. Last 3 months negative. This is medical, computer software, energy, solar. Yep, solar is suffering really bad. Computer software, medical software, desktop, retail, consumer production, apparel, shoes, computer software, retail, mail, order, and direct. And most of those are suffering because first, chip shortages. SMH, which is the chip industry ticker, has been suffering as well with bad results from leading stocks in the group like Nvidia and AMD. So chip shortages is one of the things that is driving those groups down. The other one is the overvalue in Nasdaq that we had, explosion of value in computer related companies. Now it's coming down. And the other thing is that inflation is really hurting those groups. So we will see what the Feds are doing, and this is a transitionary thing that I wanted to put out here, with the uncertainty being the thing that is really breaking the markets right now. If there's one thing that the markets don't want, that's uncertainty. We have the war or the sort of developing war in Russia and Ukraine that we don't know what's going on there. Every day is like a different story. And then we had the Fed rate hikes that are basically they are saying some numbers like 100 points or 150 points by July, but they're not just giving the market like a certain schedule how they're going to do it. So there are like different versions like coming out every day. And if there's one thing that the market does not like, that's uncertainty. If we were sure that Russia is going to war with Ukraine, that's fine. If we had like a schedule about the rate hikes, that's fine. The market can take that. And the market, as you saw last week in Tintin's video review, the market's been doing actually good after the initial shock of a rate hike. It's been going generally good. So the rate hikes themselves, they're not that bad for the market. The bad part is the uncertainty that we're getting from different Fed members. So last but not least, again, summary of the market. We're on sell signal. The setup is selective to none. Maybe you can try some, longs if Nasdaq holds this support and tries to go to the sloping resistance line. But again, cash is king. The market is in distribution. The put volume is low. Volatility is increasing, and the geopolitical tensions are everywhere. So, with that said, guys, just be careful. We are going to be posting some trades that we find suitable for swing traders. But again, as I said, if you're not comfortable being fast in and out, just stay in cash until market improves, and it will. That's a given. Market will improve. There'll be plenty of opportunities to make money. All right, guys, stay tuned for more, and I'll see you in chat. Bye bye.